Hello, YouTube. Netflix and Tesla earnings are both out, and oh my goodness, are we up in after hours? Netflix is up by nearly 13%, and Tesla is up by 2% in after hours as I record the video. Might change into tomorrow, but that's where we are right now. The reason why this is so interesting on Netflix is because we can look here and see that I have this green line, and as we zoom out to the weekly chart, what do we know? Oh man, this is really strong support. It's our relative low going back to earnings. It's our uptrend, and this chart looks pretty good. It's also supported because Netflix now actually reported its best subscriber gain in years. Compare that to Tesla. Let's look and see what Tesla looks like. So let's get rid of those lines. Let's bring up Tesla. So the reason why Tesla's a little bit different is because it's currently battling for a golden cross here. And the pattern's a little bit different because as I look at this a little bit more objectively, I look here at the monthly chart on Tesla and I note that we do have a head and shoulders, which is what I have pointed out before. We do have upper wicks, but we have an inside bar on the month, which means that I think the next break is going to be the big one. If we look here to the weekly chart, arguably this could be a cup with a handle. It could also be an inverse head and shoulders in the shorter term. But as a reminder, more time on the chart means more significance. So I think Tesla has a few headwinds here. And I'm actually a little bit surprised the stock is up because they missed. They missed on earnings, they missed on margin. But that sweet Cybertruck is coming for deliveries starting on the 30th. I think that's the reason why the stock is up. So a lot of this matters because as we look here in after hours, it looks like it was actually not a terrible day, but whoa, was there blood. There was a lot of blood today. And what's the saying? Do we buy blood? Oh, that's right. Buy when there's blood in the streets. And if there's measles in the sky, it's time to buy. Well, what happened last night? I know it's a terrible thing. I know I don't really want to talk about it, but this is usually a buying opportunity. And I'm going to talk about something that I made a mistake with a little bit, in a little bit here. And what I'll also go through is talk about how these individual charts are going to feed through to the NASDAQ because, oh my God, we're down by $2, Justin. That's it. Stock market's over. I'm seeing a lot of fear out there, even though we're down by $2. Currently, the S&P is down by $1. And that's as we're hitting the cash market close. We're down by 0.3%. I think if you would have told me all the news that happened this week, we would not be where we are. We would be down. We would be down. We would be down. And what's making this a little bit challenging is that today was VIX expiration. If you don't know what that means, it means VIX expired today. On Friday, we got OPEX or options expiry. And VIX has gone a whole bunch of nowhere this week. It's down by 10 cents. But if you look at the chart today, you're like, whoa, this looks like Netflix, only up. So we briefly got over 20 and then they crushed it. So this is expiration. It usually means they want to try to whip up the volatility to try to get paid. The 2-year note did advance. This gets me a little bit anxious as a bull. I don't like this at all. And then the 10-year note is actually approaching 5%. This does not look good. But what surprises me so much is that as we look here to our previous crash signal, which we used in 2018 and we used in March of 2022, after we broke out of the W or put in that win and go to the new high, put that win in and go to the new high, what I'm not sure about is whether or not we're going to get continuation like we did here. This is a big move from about 2% to about 3.5. That's a big move. It's almost a double. For us to repeat that same magnitude here, we would have to go a lot higher than 5. So even though this is a dramatic move, it's not nearly as dramatic as what led to the crash in March. And then what happened in March? As you all know, that was the SVB crisis. That was the bottom for 2023. October was the low for the bear market. So as we move forward here, well, good news is good for Tesla, for Netflix, sorry, up. Record beat. This is bad for people who share passwords, but excellent for the company. And before we go further, I'm going to ask you for a huge favor. If you could please consider smashing the thumbs up and subscribing to the channel, I would greatly appreciate that. And I'll thank you ahead of time because you guys are just such a great support. All right. And then we move over to Tesla. Tesla misses on earnings, misses on margins, dropped from last year. But that sweet Cybertruck is coming in. Tesla profits take a hit after deliveries slow down and they're cutting prices. All right. I made a mistake on this, which is what I mentioned at the beginning of the video. I've been using fear and greed, saying that we're not getting more fearful as the chart goes down, but I overlooked something. I overlooked the fact that this has not been updated since the 16th, which means the data is actually static as of the 16th. So when I'm saying, hey, we're not moving lower on fear, I was wrong. I made a mistake. I am human. What's important about earnings for right now, which means Tesla and Netflix, is that for Q3, meaning the third quarter profit growth estimates for the S&P, we were looking for the big five and financials to really pull their weight. So this will be really important because Tesla actually missed on earnings. Netflix delivered, but Netflix is not nearly as big as Tesla. So we have to keep that in mind. We know the banks have been delivering so far, and now we got to see whether or not this is going to be more of the same, or if we're going to get a big shock and big tech going into next week is going to disappoint. As a reminder, a lot of these earnings are not yet confirmed, but we usually see Apple, Microsoft, Amazon all report in the same week. I'm guessing that's going to be next Wednesday and next Thursday. That's usually when it'll happen. As of right now, they're not yet confirmed. But what we do have for tomorrow is going to be more economic data. So let's look to see what we were looking for going into this week. We were looking for retail sales. We were looking for inflation out of Europe. We also had a strong GDP print out of China that came out overnight. And then we got initial jobless claims and the big man talking tomorrow. Those will be the final pieces of economic data for this week. Let's just go through and see what those numbers look like. So let's go to this week. Everything's up. Core retail sales up, revised up. Inflation up a little bit. Building permits up. Crude oil inventories. This was largely, this also did not help oil today. Also with Joe Biden being in a certain country and the SPR being really low, that drove oil higher. But not only oil. Oil is up a little bit today, but when we look to gold, gold is making a big move. And it's making a big move because we're actually above our previous all-time high, which is 1923.7. I have it right there. But we've already seen this move happen on a lot of other currencies. XAU, CAD, massively new all-time highs. We're a lot higher than 1800. We look over here to XAU, EUR, or the gold price in the euro. Man, that's that same high. The S&P, the US dollar is battling for right now. So it's really only this one that's left. And I don't know what this means, but people are buying a whole bunch of gold. Bullish engulfing monthly candle. It's usually pretty bullish. So I'm not sure what that means yet, but we're paying attention to it. And then with Jerome Powell talking tomorrow, I'm really hoping he's going to say, hey, guys, hold my beer. Time for me to make the chart go up. I'm not 100% confident on this. It's really more of a hope than it is of like a guarantee. But I believe, keeper here being believe, not I know, I believe that we're going to hear more positive commentary from Jerome tomorrow, because as important as, the dual mandate, which they always talk about, right? Price stability and full employment. What's more important than both, what trumps it, using that word intentionally, is financial stability. There is no inflation. There is no price stability. There is no full employment without financial stability, and the U.S. being the superpower and the reserve currency. So I think that right now, Jerome Powell might start talking a little bit less hawkish, which could be positive for stocks. It's a lot of ifs, could, maybe, hope. We don't trade based on hope. We trade based on a plan. And we'll come back to that in a few more minutes here. So far, all of the economic data has come out strong. But is that really a surprise? When we look here and see that today we got another revision, Q3 GDP coming in at 5.41%. Does it make sense we're seeing yields above 5? Does it make sense that we're seeing these numbers come in hot? I think so. But at a certain point, people are going to run out of money to spend. So I'm not sure what this means. I think good data is good, but at a certain point, it's not sustainable. So we got through earnings. We got through a lot of things this week. We got through retail numbers. We got through an update in the Middle East, a big, nasty shock surprise. And something else I'll be paying attention to into tomorrow is Lululemon being included in the S&P. Airbnb and BlackRock, when they both joined, was a sell. So if we look here to Airbnb, we can clearly see when they got added into the S&P, that was the sell. That gave me a big clue. We can also see that here with Blackstone when they got included. That's the high. People are forced to buy, and then it fades. So I want to see if that same thing happens here to Lulu, because it's making a huge run into it. Maybe it actually got included in the S&P today. That is like way oversized volume. Maybe I'm wrong on the date. What day is it today? Oh, it's Wednesday today. Oopsies. It's actually Wednesday. No surprise. We're having a red Wednesday. So we see the same move here. I want to see what happens with Lulu. If it goes all the way down to maybe even lower like those last two charts. All right. So we talked a lot about news. We talked a lot about what could be happening this week. Now let's do something that we do most days. Let's go through here. And I actually was looking for exactly 429. I shared a note with our group today. If you want to find out more about that, you can go to thealgo.com to get a 14-day free trial or to trade with me. But I'll share the note tomorrow if it does materialize. I called out specifically 429 to 430. as an area on a pattern I was looking for, and I will update you on that tomorrow. So I know we joked about this a few times, but let me see if I can pull up the correct chart here. All right, guys, we looked over here at Netflix and we noted that it's right on support, even went briefly below. And then what did it do? Man, boomtowns, baby, went massively up. So it's pointing up, candle didn't close yet, and it was a buy. If we now go to the S&P, oh my God, are we pointing up here? Okay, we're pointing up. We hit a mathematical number of 429.61. Okay, on the daily chart, we're still pointing up from our October low or the bear market low. This is very important because bounce, and a little bit of a trap, bounce off the 200. And now we're not sure. Like I mentioned yesterday, we didn't quite get to the 200, didn't quite get to the 50. And I was looking for a bit of a correction yesterday going into today. Happy I got it. This is exactly what I wanted to see. I wanted to see whether or not we're building a staircase of support as we go higher, or if the bears were going to come in and capitalize on it. So if now we look at weekly charts, let's try to be a little bit objective as we try to understand what the chart is telling us. I understand there's fear. I understand when measles are in the sky, it's not time to buy for most people. They get scared. They think it's time to sell. They look at names like Tesla down 5. They look at NVIDIA down 4. And they're like, oh my goodness, how can I hold on to stocks? They're just stinkies. Well, I'll tell you the reason why. Because your feelings do not make you money. What makes you money is by buying lower than you sell. Or if you're shorting higher than you cover. So if we're pointing up, and objects in motion tend to stay in motion, and we're not getting any evidence yet because we don't have a weekly lower low. We actually have another expansion signal, even though we're red on the week. What does that mean? It means this. I went over it on the weekend. We have a failed breakdown. Let's go through it now. Failed breakdown, which is a bottoming pattern. Then we got a higher low and another higher low. Then we got a higher high and a higher high. This is a failed breakout, which means we did break out but failed to hold it. But technically, we're making progress to the upside because we have higher lows and higher highs. I mentioned on the weekend, too, what I need to see, not want to see, to know we're actually flipping bear, is I need to see a weekly lower low. So 429 is where I expected to find buyers, 429, 430, that 429.61 mathematical Fibonacci area. Now that we hit it, I expect that we're going to be going straight up. But I'm also not blindly bullish, right? Why? Perma bulls and perma bears are pigs, and pigs get slaughtered. I want to stay alive. I don't want to turn into bacon. So what I want to do is I want to watch to see whether or not that 427 holds, which is why I am recording the video a little bit later today, because I wanted to make sure that if I'm going to still be bullish on these videos, that I'm at least getting a little bit of early evidence that maybe I'm right. I'm not sure I'm right, but I think I am. And I'm trading based on that because I have a plan. And I talked about a stock that I mentioned on the weekend. I don't even know what it's doing right now. Raytheon. Think about that thing at 72.7. It's currently at 74. So it's great when you can make money and you don't even have to think about it. All right, now let's look at the NASDAQ because, oh my God, people are so scared about the NASDAQ right now. That's it. It's over. Tech stocks are down. It's time to sell. It's time to run for the hills. Well, technically, we're flagging out here. This is a channel, which means that we hit the top, and we reject, hit the bottom, and we bounce. So what does that mean? The pattern is acting in a predictable way. Ever since the July high, which we mentioned yesterday, was from, ironically, the same thing we just got today, Tesla and Netflix reporting earnings 3 months ago. That was the top. Well, they just reported earnings again. Could that be the bottom? Could, maybe, yes, somehow. I don't know. Let's see. But what's important for me is going to be, as this weekly candle is getting formed, we have an inside bar. An inside bar means we defer to the dominant trend. And the dominant trend for me is still clearly up. I don't know who's going to tell me that this is pointing down. Please drop me a comment and tell me why you think we're bearish. Because if I just slap an uptrend in here, we still have room. We're still pointing up. I just don't need that line there for me to know that we're bullish. As I now look here to the daily chart, there is some bearish evidence. We cannot ignore this. What's the bearish evidence? Well, we got a pennant, which means red is resistance, green is support. We're still inside the pennant, but we closed below the 50 DMA for 1 day. So it's getting really trappy on this 50 DMA. They're definitely doing a good job to suck up all the liquidity. And we can note that this is a breakdown. And after hours, we're back above the low. So NQ will be a failed breakdown, but this is a breakdown. We got a lower high, you got a lower low, and we closed below the previous candle low. So what that means is that if we get a second daily candle close below the 50, I would say something's wrong. And with Jerome talking tomorrow, we're likely going to be right on our uptrend. And then I'm likely wrong. We're likely going for a weekly lower low. All the QQQ has to do to print that weekly lower low is to lose the, let me just double check here. We got to just go down to 360. So we got to go down roughly 1% more, or basically a repeat of today, 1.3% decline. So if that happens, we're going to be stopping to go up. We will be going down. We're going to have 2 daily candle closes below the 50 DMA. That would be pretty bearish for me. And then I look at the names that are dragging us. Well, NVIDIA looks like pretty crap right now. So low, higher low, but not by a lot. And I'm sure people aren't looking at this and saying, oh my God, NVIDIA looks so juicy. They're probably thinking, wow, it's going for a gap fill. Remember when I mentioned that before and you guys made fun of me? Well, here we are. It looks like maybe that's going to happen. Maybe it does, maybe it doesn't. I don't think it really matters because they don't report earnings for a while. So what really matters is Apple, Microsoft, Google, Amazon. Those companies matter a lot more. They're just a lot bigger. So now let's go through a few more charts that concern me because I've talked a lot about the ones that I do like. I briefly mentioned the ones that I don't like. So the ones that I don't like, golden cross on the dollar, daily chart looks pretty bullish. On the weekly, oh my God, right? We're butting up against a level that goes all the way back to 1989 in June. I was only 1 year old. That's right. I was born in 1988. And this is not good because I just don't like it. We're back to an area where this is going to add more pressure to stocks if we keep going higher from here. That's a big area back to the 1980s. And we're currently pointing up. We got a golden cross on the weekly. It's starting to look like there is potential we could go higher. The 50 is crashing right now, but let's take that with a grain of salt. And as we look here to the VIX, like I mentioned, below 20 means the market is calm, cool, collected. It means that it doesn't think there's going to be any volatility. But as we look here, volatility usually comes all at once. What's different about this time is that we usually get a massive bout of volatility like once per year or every couple of years. We get a massive spike like over 40. So over 40, we get 1, 2, 3, 4, 5, 6. But then what's happened more recently is that, as you probably know, there's been a lot of scary headlines. So we get move to 40, move to 40, move to 40, move to 40, move to 30, move to 30, 30, 30, 30, 30, 30, and now we're back here at 20. So in my opinion, this period right here has been a lot more volatile because what we always say is that you want to expect the best, be prepared for the worst, and be ready for a surprise. Well, we've had a lot of surprises in the last 2 years, right? Take your pick. Money, geopolitics, almost anything has had an issue in the last 2 years. So the fact that we've had all of these bouts of volatility means that people have had to really get a gut check to know whether or not their portfolio can actually withstand a crash like what happened in 2020 and in 2021, which is why I believe this current bout of volatility will be less than before because there is no surprise. We've had geopolitical, we've had a ground invasion, we've had a financial crisis, we've had almost everything, supply chain shocks. Whoa, like what else has happened? But the challenge here is going to be that if we do get a sudden move in volatility, I think a lot of people are not going to be anticipating it, myself included, not to the extent that I think, which means this could be self-fulfilling, where we actually get a big hurt. I'm not going to leave the video too much longer because it's already been pretty long here. Instead, I'm going to encourage you to go watch our weekend video, now queued up here on the left-hand side. And if you want to subscribe to the channel, that is now queued up here on the right-hand side. Thank you so much for tuning in. I look forward to seeing you tomorrow.